At Henderson, we have for a long time been running sustainable investment portfolios. Sustainability is the single thread that runs through those portfolios, and that's in terms of finding companies that fit into long-term themes, companies that can provide solutions to some of the environmental and societal challenges that we face, companies that are managed in a sustainable manner, that generate sustainable cash flows, have a very sound long-term record in capital allocation and appropriate governance framework. So really it's about, I say, looking for those opportunities, companies that provide solutions to the challenges around climate change, resource constraints, growing population and aging demographics. I think the whole discussion about sustainability and particularly impact has been a very live issue over the last few years. Traditionally impact has been most obvious in private equity funds, but it's now a term that's being used in the public equity markets as well. I think as an industry, we're still struggling to be precise about that impact. For me, one very obvious way is to think about the carbon footprint of a portfolio. As we transition to a lower fossil fuel economy, and for the very live issues around climate change, carbon footprint is a critical issue. For our portfolio, if we measure our carbon intensity compared to the index, it's about 1/3 of an equivalent portfolio invested in the MSCI World Index. And globally, we're probably one of the lowest carbon funds available. So we have 5 environmental themes and 5 social themes. They're long duration themes, they don't change. And those include areas like efficiency, sustainable transport, clean energy, health, social property and finance. So really every company in the portfolio has to fit into one of those 10 themes. Either a major part of its activities or a major growth driver has to be in one of those themes. It's companies providing solutions to some of the challenges. So water is another theme for us in the environmental section. Water is a very scarce resource. Globally, as we increase the level of meat production, this happens as economies develop, there's more and more call on water. Of all the water in the world, only 3% is fresh water, and about 3/4 of that is already captured in glaciers. So real challenges. So we're looking to companies that can provide water efficiency solutions, that can actually provide recycling, testing, treatment in a more environmental and sustainable fashion. We start by looking at companies that could fit into one of our 10 themes, and so we've identified those stocks already. Our conversations with management are largely around how they are managing the business within their operations, within those activities. Are they cognizant of the major environmental and social risks that they face longer term in their business? And what we found is that those management teams that are aware of those risks tend to be just good managers. They also tend to be very good allocators of capital. They're just good long-term strategic thinkers of their managers of their business. I think it's interesting that you need to look long-term to invest in this space. And when we look at academic work from the US, we find that funds that have low turnover, so taking long-term views but have high active share, tend to outperform, whether that's a retail fund, whether it's an institutional fund, whether it's a hedge fund. It's a common pattern that's been observed over a long period. And certainly for our portfolio, with a focus on particularly medium-sized companies, these are the companies providing the solutions, we do end up taking a high active share, and our turnover is very low compared to other portfolios.